Happy Friday, everybody. This is Joe Cusick from the Cusick Group, and looks like the markets are shaking off both the RNC and the upcoming DNC political events. And right now, earnings have been driving the market to the upside. You have the S&Ps right off some of its best levels that we've ever seen at 2160 and some change. But bull markets tend to ignore warning signals, and that's what I want you to think about going into the weekend. You know, we're climbing right now that proverbial wall of worry, and until the bulls get to a point where they don't really see the upside, until they don't see the fact that there's low volume and things of that nature, they're going to continue this move to the upside. Betting against the bull market, though, that could be extremely painful, and there's been a lot of clients and traders that I've talked to, but that have had that pain for the last couple months. Basically since February, there have been a lot that have been fighting this tide. But you know, you got to look at this from another angle, and you got to remain cautiously bullish in this, but you got to look for the warning signals. All right, and some of the warning signals that I want you to see that are going to start to emerge are going to be things like poor index and sector rotation, a strong treasury market, lighter than normal volume that we've seen on the S&Ps that are trading behind me, especially on the latest breakout. Relative weakness in the finance sector, especially in banks. That is something that has got me very worried. And as a money manager, I've had my clients basically about 60% cash while I've notionally positioned myself to still participate in the upside by utilizing options. And then you got to watch out for the seasonal bearishness. These are all current warning signs that I've seen pop up, especially lately with this most recent quest for and shot at the new all-time highs. And they shouldn't be something that we should just shake off. I want to be very careful of that, and especially after we saw the recovery after the Brexit pullback, it didn't have the conviction of volume behind it, and that worries me. So as a result, I'm going to continue to watch the earnings, and they've been strong. If they continue to be strong, that's going to be a catalyst that could then start to bring more volume to the table and advisors like myself and institutions back to the trading realm. Areas that I want you to watch for particular volume spikes are going to be energy, watch the materials, watch technology for potential not only volume spikes, but areas where you're going to want to see some setups in your portfolio to start to get potentially long if we see that volume, we see the earnings, especially in those sectors, continue to come out and they're bullish. One other area that I want to keep an eye on that has been on my radar screen has been the industrials. They've strengthened considerably, and that could be a universal play. If we start to see that Europe firms up, Asia starts to firm up, and here the domestic economy seems to be firming up, you could see that the industrials could continue to the upside, and that should be a sector that should be represented in your portfolio as well. Well, that's it for today. I want to wish everybody a great weekend. Next week, we're going to have a DNC convention. We're going to have the potential for some volatility getting into the market with the earnings continued. So stay on your toes, do your homework this weekend, and we'll talk to you next week. This is Joe Cusick from the Cusick Group, wishing you a great weekend, and see you then.